This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Bitcoin, blockchain, ICOs, Ethereum, and all the rest. Are cryptocurrencies the 21st century unicorn, a speculative bubble, or the future of money? The CryptoCast will help you understand the rise, the fall of digital currency, the highs, the highlights, the potential, and the lows, the scams, and pitfalls. I'm your host, Jason Hartman, and we'll talk with some of the biggest names in the space. CryptoCast is your resource for all things crypto. Let's go. It's my pleasure to welcome David Drake. He's the founder and chairman of LDJ Capital and the Soho Loft Media Group. They are a global financial media company focusing on publications and conferences. David serves on over 40 ICO boards. ICO, of course, initial coin offering. You're hearing that term a lot nowadays. David, welcome. How are you?
Well, thank you for having me on. I'm great. You're catching me in the Hamptons today, although I live in my offices in New York.
Fantastic. Well, certainly crowdfunding and cryptocurrencies are things that have been talked about a lot over the past few years, but especially now. Your company tracks, for the last decade, you've been tracking crowdfunding platforms and cryptocurrencies. Now, is there a relationship specifically there, or are they just two things that interest you?
Well, before I answer the relationship is that, we have a long history with SEC and FINRA lobbying for the Jumpstart Out of Business Startups Act in 2011 and 12, which changed the 33 and 34 Act where you can advertise. So my family office, we've been investing in real estate for a decade, and we also invest in technology and fintech, and now heavily in cryptocurrencies and previously in crowdfunding. We have a cryptocurrency fund in the Cayman, and I'm advising a lot of real estate-based cryptocurrency funds and crowdfunding funds. The relationship is that crypto is based on the crowd giving you cryptocurrencies from around the world in 2 seconds with their phone or computer. It's a crowdfunding that is the mechanisms of bringing capital together really quickly. The crowdfunding started early in 2010, albeit, crowdfunding is the same thing as the little village collecting taxes. That's the crowdfunding taxes to take care of the city. It's not a new concept, but the millennials like to give it a new name. So the Jobs Act passed the world's first crowdfunding law in 2014, and that took, 15, and that took actually Mrs. White from the SEC 4 years to pass after Obama signed it into law April 5th, 2012. That allows you to advertise and use the crowd to bring capital in. Right. Crypto's using the same thing, but instead of just U.S. people investing in it, they're saying anybody in the world can send us crypto on the phone. Mm-hmm. The world just became a huge marketplace. So the initial coin offering, as you refer to it, is similar to the initial public offering. It's a public offering of a software solution, a token, a cryptocurrency that people around the world can send to you instantly.
Yeah. So with the Jobs Act, which I think, was fantastic, it's just created whole new industries, probably one of the best things Obama did, in my humble opinion. I mean, people can do an IPO, and of course they have to jump through tons of regulatory hurdles, and it's just out of reach for most people. Crowdfunding brought that concept to the masses, which is fantastic. Of course, let the buyer beware. There, I'm sure, has been and will continue to be a lot of fraud, a lot of problems, et cetera. But, that just goes with the territory. But with ICOs, initial coin offerings, are there any, I'm sure there must be, are there securities hurdles? Is there any regulation? Is the SEC regulating this? Or is it kind of still the Wild West?
Right now, it is pretty much the Wild West because SEC hasn't come out with complete directions how to deal with it. There's over 20 lawsuits in the U.S. the last 5 months arguing, is this capital gains with the IRS? Is this an SEC issue? It's a commodity, which Chicago wants it to be. It wants to be commodity like a currency, or a commodity like corn and wheat that you trade. Or is it a utility, which is just a gaming token? So lawsuits around the nation are trying to define, and they might all be right. The direction on how to deal with it will be dictated by the SEC over the next quarter. And we want that to be dictated because it makes it easier for us to continue doing these deals with less legal cost and better understanding. Singapore, for instance, in October already came out with rules. And they said, in essence, look, if it is a security and you're doing crypto, with an underlying asset, but less than 5 million, you don't have to supply with a PPM, a personal memorandum of what you're doing. So that gave us guidance in Singapore. We want the SEC to come there because they're there to protect us, not to get ripped off. But listen, I'll give you an example. During the crowdfunding days, everybody screamed fraud, fraud, fraud. There weren't any frauds anybody can remember. And when somebody got hit with something or shut down, the news went wild. Same thing is happening right now. Munshi, a couple of weeks ago in November, actually got shut down, but the SEC wrote them a letter saying cease and desist. You have put in your documentation that you are selling something that's going to increase in value. Howie Act of 1946 says that if you buy something expecting to increase in value, it might be considered a security. Munshi themselves shut down the business voluntarily and returned all the money.
I'm not sure people caught that company name that you're saying. Can you say that more clearly, or maybe is there spelling needed? What country was that in?
Munchie. The U.S., of course.
Munchie. Okay, got it. That sounds like it was a reasonably good resolution then. But, it seems to me that the regulators, if they want to find a reason to, regulate all the opportunity out of cryptocurrencies or squash them completely, it seems like they're kind of piling up their list of reasons. For example, and maybe you can speak to this, of course we all are familiar with the old Silk Road days and so forth. Like last week I read an article about a woman who sent about $80,000 in Bitcoin to ISIS, right? And, they'll just have all these excuses, illegal drugs, terrorism, et cetera, with cryptocurrencies, as well as, for our own protection. We've got to protect the consumer. What are your thoughts about that?
Of course we do. And, honestly, Silk Road, which was a legal website where people were trading illegal goods and services, 80% of the Bitcoin at that time a year ago traded in the whole world was on Silk Road. We have to figure out a way to monitor that and keep it safe for everybody. And the nice thing is, even though Bitcoin, for instance, the first cryptocurrency for 2009, is immutable, you can't change it because the ledger is the same around the world on the computers. And the calculations to identify it makes it so slow that it's not efficient for somebody to try to break into. They physically couldn't do that because logistically they can't. And it is somewhat anonymous. They can legislate the exchanges where you can transfer those things to other cryptocurrencies or to cash, or attach it to your bank account. And that's exactly what they're doing in the U.S. right now. Mm-hmm. And I think there'll be more, everybody's realizing the anti-money laundering and know your customer, KYC, are requirements that about all the leading exchanges in the world are starting to implement. Mm-hmm. China even started off and just said ICOs are forbidden across the board because they already had a lot of Chinese ICOs that we in the West never saw because they were in Chinese. So why would we see them, right? Mm-hmm. I think that the SEC is monitoring in the U.S. and they're warning the ones that are doing things that they shouldn't be doing. And you're going to see we are self-regulating ourselves. Mm-hmm. And I think certain markets are stronger in less regulation than we are, such as Russia. Putin, of course, is not going to be listening to the U.S. on this topic. Mm-hmm. So we see an immense amount of companies coming out of Russia. That's also one of the critique of the ICO. There's no governance. Mm-hmm. There's no regulation dictating what you should do with the money and what you should show to the public.
Right.
Initially, this was built for problem solving. The tech geeks, the anarchists, and the developers of technology started creating these coins to solve the problem. Now that's conflicting and is confronting the masses. Everybody listening, and the speculators, and the traders, and the forex traders now entering the space, the hedge funds entering the space. So you have two worlds colliding. On one side, the libertarians, the anarchists who started the Bitcoin movement, they all buy to hold. They would sleep on sofas when Bitcoin fell from $1,200 to $300 3 years ago, and they would refuse to sell it. And that still remains. All the Bitcoin in the world there is limited, and everybody who was a follower like myself early on, we're not trading. I'm not trading. I'm not selling. I only buy and hold. All of us do that. So now when the mass market is coming in, that's why the price is going up, because the supply is not increasing. Mm-hmm. It's fixed on Bitcoin. And consequently, more people want to buy it, supply and demand, price goes up. And us original guys, everything up to now, we don't sell. We buy, we hold, and that's it. So I think people say it's a bubble. Yes, the original people got involved in early days, and I myself got involved in 2011. And the developers, the guys building the technology, and the guys coming up with ideas and problem solving, and the geeks and technologists, we bought to hold. We built it to solve problems. We weren't doing this for speculation. We weren't doing this for Wall Street. We were doing it in spite of Wall Street. It was like the Wall Street Occupy getting a voice in the crypto.
Right.
And now, as we're meeting in the mass market, buying it on Coinbase and other places, and hedge funds coming in, and especially institutions coming in, prices can go straight up. Why? We're still not selling. So why would there be a bubble? Well, if all of us who's holding it for 10 years decide to sell at the same time, yeah, that would be a bubble. But we haven't for 10 years.
Right. But some people are selling. I mean, certainly people trade every day, right?
But those are not the original guys. Those are the day traders. Those are the crypto hedge funds who's got into it this year. Yeah. Those are the Wall Street coming in. Those guys are doing it.
Did you feel that you addressed the regulatory risk? Here's kind of my concern, okay? Every government and central bank, the most powerful entities in the world, their primary product, if you will, their widget is currency. That's what they make. That's what they produce. And why would they allow a competitor to come along and disrupt their business of making currency? Whether it be the dollar, the euro. Yeah, they hate it, right? You agree with that?
They hate it on the surface, but they're going to actually turn around. Then G7 is going to get together and realize that the cryptocurrency doesn't have the inflationary products that their own country has. You remember, the US dollar is being printed when we need it. Other countries are printing dollars when they need it. Yeah. Crypto is fixed at 21 million.
Well, only one crypto is fixed at 21 million. That's just Bitcoin. There are other cryptos. So, there's no limited supply of cryptocurrencies. Those are, in fact, I would argue that those are, in a way, the most fiat currency in the world, because instead of a government creating it, anybody can create it and do an ICO. I mean, you're the ICO expert. You're the go-to guy. So,
The reason we're bringing up Bitcoin over and over again is because, Bitcoin has a $350 billion market cap today.
Right.
And the second and number three, Ether and Litecoin, they have 30 billion.
Right.
That's why we're bringing up Bitcoin, because should a government say, well, wait a minute, we have inflation, but Bitcoin doesn't have inflation. I mean, there's no debt attached to it. There's no liabilities.
Yep.
We can eventually see within the next 24 months, G7 and others saying, wait a minute, we're going to put Bitcoin into our currency baskets because they're anti-inflationary. And that's going to be something interesting.
That's a really interesting thought. I always thought, and listen, I philosophically hate what I'm about to say, but if I were a government or if I were a politician specifically that wants to buy votes by, giving it, dropping money on everybody, if I'm, Ben Bernanke, Janet Yellen, Alan Greenspan, all the rest of them, right? We had to, except for Paul Volcker, maybe he's the only one that would be the exception to the rule. Inflation is a great business plan for me as a government or as a politician, because I can spend, without restraint and just inflate away my debt. I mean, the U.S. is in a fantastic position vis-a-vis China. People argue about the trade war, but I think it's about the greatest deal ever. Let me see. In the U.S., we print fake money and we buy stuff from China, so we get all the lifestyle benefits of all those great consumer goods that they produce and they sweat for, and then we just devalue our money by creating more and buying more stuff. What a deal. That's the best deal on the planet. I wish I could do that.
And you know what? Guess what? All those manufacturers in China, which I've been working with very closely, they keep the money in the U.S.
Yes, that's even more interesting, because they actually repatriate it, possibly, on a sort of per capita basis to a larger extent than our own American companies like Apple do with the double Irish twist scam. It's an amazing world.
It leads to another point here. Crypto allows the individual to take advantage of offshore banking and offshore production and businesses that the conglomerates have been spending millions on taking advantage of for 200 years. Now crypto is outside the reach of certain tax registrations. You can decide to have a bank account with your revenues from crypto in another jurisdiction and reduce your tax liability. just like offshore companies doing it.
But what makes anybody think governments are going to allow that? There's no way. I mean, we can argue all day about how it's decentralized and the government can't stop it even if they wanted to. BS. That is simply not true. I mean, maybe the government can't completely stop it. They can't completely stop drug smuggling either, or prostitution, but they can put a huge dent in it, okay, by making it illegal and, making it the risk of losing one's freedom. I'd love to be wrong about any of my pessimism here. I really would, because I can't stand the central banking cartel. It's a scam. We all know this, right? But I think the government and the central banks are just too powerful. What do you think?
Well, listen, they are only powerful in their own jurisdiction. U.S. SEC can go outside its borders and inflict their rules on other countries, but certain countries they can't.
The U.S. controls jurisdictions all over the world. I mean,
yeah, but not China.
Look at the banking. Russia, look at the banking privacy
India.
stuff. Look at the raid on the offshore bank accounts under the Obama administration, and they just say to these other countries, look, the next time you have a disaster or if you want our protection, you're going to reveal the offshore bank accounts. You're going to reveal the cryptocurrencies. You're not going to allow this in your country. They can do anything they want. The long arm of the IRS and the U.S. government is just, it's an empire. It's insane. It's ridiculous.
Yes, it is. It is. And it started in, Roosevelt days with the New Deal.
Right.
And, laissez-faire, and let South America and North America be our territory. So it goes back hundreds of years. It's not a new idea.
Yeah.
That's why, this is liberating. At the same time, the regulators are tearing their hair out of their head, and they're frustrated because they don't have full control yet. Mm-hmm. Interesting, huh?
Yeah. Yeah,
but
it's interesting.
It's also a new asset class. Mm-hmm. Chicago Mercantile Exchange started just recently, and they're treating it as a commodity, it's a currency. And they're saying, yes, it's a new asset class. And there's always headache. There's always growing pains and institutionalizing and setting up processes and structures every time you have a new asset class. And that happens very rarely. Mm-hmm. So we're very exciting times. And I would say, you know what? I hope you guys give somebody a Christmas gift of cryptocurrency this year.
Yeah, we shall see. We shall see. Well, good stuff. Anything else you'd like to say in closing? And please give out your website. Tell people where they can find you.
Follow me on LinkedIn under LDJ Capital. I'd love to have you guys follow me there, and my contact info is there if anybody has reasons to reach out. I'm fairly accessible, and I thank you, everybody, for listening today.
All right, David Drake, thank you so much. Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.